Today on the Blockchain Report, Bitcoin is sitting at 115K, and it might be because Michael Saylor's on Capitol Hill begging Uncle Sam to stack 1 million Bitcoin, turning the US government into the world's biggest DCA bro. A shiny new super PAC says it's dropping $100 million on pro-crypto politicians, which is Washington speak for, here's your bribe, now don't ban my bags. And Trump's trying to fire a Fed governor the exact same week the Fed cuts rates, because apparently the only thing more volatile than the dollar right now is Trump's HR department. All that and more in today's show. Let's go! Good morning, my disciples of digital delusion, and welcome back to another episode of the Blockchain Report. I'm Hank Hudson, coming to you live from San Francisco, California, the city where tech bros are still pitching apps that solve problems that no one actually has, like Uber, but for buying socks. It's Tuesday, the day where your boss calls it team alignment while you're secretly aligning your portfolio with Michael Saylor's latest buy order. Now, before we dip headfirst into today's buffet of trillion-dollar asset managers going all in, politicians suing each other like it's WrestleMania, and retail traders panicking harder than a Dogecoin holder on earnings day, hit that like button and make sure you're following RoxomTV and me and Hank at RoxomTV, because if your financial advice still comes from that one guy on TikTok who trades from his mom's basement, you deserve to get rugged by an NFT shaped like a ham sandwich. Now, let's get into this morning's market rundown and see who's stacking Bitcoin like dragons, who's melting faster than a Solana validator, and who's praying Jerome Powell doesn't sneeze on live TV. Let's take a look at the numbers. Let's go. All right, today, Bitcoin sitting pretty at that 115K mark. We've seen it as low as the mid 114s in the last 24 hours, but things certainly seem to be on the upswing, as we saw the high like 108, 109 just about a week or two ago, but things are moving back. 124 is in sight. Let's see how the rest of the cryptoverse is doing this morning. Also, in addition to Bitcoin, of course, we have Ethereum. It's been having a little bit of a moment itself the last couple of weeks, coming up with Bitcoin. We have it currently in that $4,500 mark, and we'll have a graphic that shows that in just a bit. And Solana, which has really been the darling of the last month or so, has been up about 25 percentage points. And again, the last 30 days, currently sitting in that 230, 235 area. Can we get TradFi up here, guys? It's a live show, you know, these computers don't always work so great. Here we go, now we got TradFi right now. You can see we've got the Dow Jones Industrial currently sitting around that $46,000 mark. Things are looking good there. We got the S&P 5 down about 0.10% this morning, negligible. We have Microsoft down about 0.5%, and last but not least, we got the NASDAQ Composite down a little bit this morning. I think some of these numbers are off. Don't take my word for it. Technical difficulties, you know what I mean? All right, we got a lot going on today's show this morning, including our first guest of the day, who is already here for our deep dive. So let's roll the stinger and get into it at the desk. All right, before we get into the newsy what's-its this morning, we are going to be joined by our first guest of the day. Very exciting. This is a guy who isn't just talking about Bitcoin adoption, he's actually out there building it brick by brick. He's created a platform that takes on the giants of the travel industry, cuts out the middlemen, and proves that sats aren't just for stacking, they're for spending, living, and creating real circular economies. He's developed the company AirBTC, which is changing how Bitcoiners move through the world and doing it without a safety net of fiat or VC money, which is bold and it's pure Bitcoin. And that's exactly why I'm excited for our conversation here today. Please give a big Blockchain Report welcome to the co-founder of AirBTC, Jake Seifert, everybody. Jake, welcome to the show. We are pumped to have you. And so is our audience. How are you doing this morning, Jake? Thanks for joining us.
I'm great. Thanks for having me.
Yeah, no, we are pumped, Jake. And before we get into AirBTC, I want to dive into a little bit about you. really quick. You've had a really interesting background as you spent over a decade in the catering business before diving headfirst into Bitcoin. How does someone go from feeding people ribs and brisket to feeding them financial freedom? What was that transition like?
Yeah, I went through quite an arduous process of just trying to figure out what I wanted to do with my life. And, it came to a point when, I found Bitcoin in 2017 and slowly but surely tried to make an effort to, get on the Bitcoin standard. So made the transitions and still operate a normal business here in the States. But while also I co-founded AirBTC, which is an amazing platform that, we're trying to get Bitcoiners to spend their Bitcoin and travel the world.
That's amazing. I love Airbnb, so I got a feeling that AirBTC is a little more orange flavored and to my liking. So we're excited to talk about that. But before we do, Jake, so you've had this interesting path, and I know it's like a lot of us are figuring out what our place in the world is, and then we find Bitcoin, and it's this beautiful orange horizon that we just can't help but go to. So that begs the question for me, and I'd love to hear about this from all of our guests. What was your, orange pill moment, as they call it? Like, how did that happen? Did someone introduce you? It took you a little bit of time, or were you right down the rabbit hole the second you heard about it? What was your epiphany like as far as becoming a Bitcoiner?
It was actually an arduous process. I actually heard about Bitcoin in 2011 when I was digging ditches, up in Virginia. And, some kid told me, hey, my parents just gave me 10 grand. I just graduated college. I'm going to buy a bunch of Bitcoin. And I asked what it was being used for. And, during the times, it wasn't the brightest of lights that was shining on Bitcoin at the time. But yeah, so I heard about it again in 2017, and I had already been through this financial crisis that we went through in 2009, and which lasted many, many years. So when 2017 came around, I started dipping my toes in and started listening to all the pundits about how the money's broken, and just tried to learn more and more every day. And it's one of those things where it's not something you're going to get overnight, unless you're an absolute genius. You have to be convinced. You have to convince yourself. So, my process took longer than it should have, but, I'm here now, and you can't look backwards.
Yeah, absolutely. And unfortunately, I think everybody's process when it comes to adopting Bitcoin takes longer than we now think it should have in hindsight, right? But as they say, hindsight is 2020. And for your friend, he bought $10,000 worth of Bitcoin in 2011. Is his name Satoshi Nakamoto? I hope you're still in touch with this guy. He was ahead of the game.
No, this guy disappeared. I think he owns an island somewhere off of Nicaragua, but nobody has his number.
Probably the best way to put it at the prices these days. These cyber crimes are getting out of control. All right, so Jake, I want to talk about AirBTC. So when you're explaining it to people for the first time, how do you explain it to them without sounding like you're just pitching Airbnb but orange? Tell me about that.
Well, we're decentralized travel and booking. We're privacy focused, financial sovereignty. We have lower fees than Airbnb and most other booking platforms. With the increase and growing opportunity that is Bitcoin, we think that we're a little early. Our business is early for the Bitcoin standard to actually take place. But when it does, and when people actually get on the standard, and when everything is priced in Bitcoin, we're going to be ahead of the curve. So, it really helps with borderless payments and resistance to censorship. A lot of my friends are from, Russia and in other parts of the world, and those people can't have Airbnb accounts. They can't travel freely. They have sanctions and all these problems. And I think Bitcoin fixes a lot of these issues for people internationally. And when we talk about foreign exchange costs, are very, very high. So we're here to disrupt, and we're doing it bit by bit.
That's super interesting. I wasn't aware that there was other parts of the world that were sanctioned from having their own Airbnb accounts. You are really solving a problem that does affect a lot of people right now, while also preparing yourself for a future on the Bitcoin standard. So once that flip is switched, you guys are going to be ready and waiting, which is super exciting. What, in this space, as in life, people often talk about ideas. Oh, I should make this, I should make that. For you, what was the spark that made you actually start building this future instead of sitting around tweeting about how someone else should? How did that all come to be?
Yeah, so my co-founder had bought the URL AirBTC, and I was actually and still have Airbnbs that I operate, and I was looking to get Bitcoin for short-term rentals. And there was really nothing that was existing at the time. I mean, Crypto Cribs had already, gone belly up, and there's many others that were not really, doing business anymore. But the idea is that, so I reached out to Andre, my partner in South Africa. We struck a deal, and we started to build this thing. So we actually have our 1-year anniversary this month. And, so our site's been live for 1 year. We've been building it out. We have 500 properties all over the world with a focus on Latin America. But, we have places all over Africa and Europe and Southeast Asia. But our main focal point is like El Salvador, Costa Rica, Dominican Republic, Colombia, Brazil. We really think that there's a large need for our services globally. But we're taking an opportunity now to really hone in on where people want to travel.
Yeah, that makes sense, especially in more friendly environments like South America, where Bitcoin has a very prevalent use case already compared to the United States here, where everyone's just kind of like gold hedge, number go up. They're actually using it down there, so that seems like a really good strategy. And you said you celebrated your year anniversary recently, so congrats. What was that like? So that was a year ago. You had no VC backing, no fiat parachute. What did those first few months in business really look like for you guys?
It's really been a grind. The largest hurdle that we've come to, people would think it's a technical issue or stack issue or something like that. But the real problem is that we have an inherent misunderstanding of what Bitcoin is at its core. And, if we go back to the white paper, I don't agree with everything that was written there, but, it was a peer-to-peer, money, we would transmit money in between each other. We've kind of lost that focus, in my personal opinion. It's all about the ETFs and Michael Saylor's new jerk of the day, or whatever his stiff or staff or whatever his new play is. And for me, I think we need to get back to the grassroots and actually use Bitcoin as it was intended, as money. And that's the only way that the number will go up long term. I think short term we can see large ETF buys and all this stuff, but if we can't utilize Bitcoin as it was intended, it might just fade into existence.
Yeah, no, there's definitely an argument to be made for that unless this becomes the worldwide accepted peer-to-peer, method of exchange, then Bitcoin will never kind of fulfill the journey or promise that we've expected it to. Is that kind of why you made the decision to go Bitcoin only with the platform? I mean, no fiat, no crypto buffet where you accept Solana or Doge or any of that junk. Is that why that line in the sand was so important for you and your team to draw at AirBTC?
Yeah, I mean, it's very important for us, but the idea is, it's such an uphill battle. We're actually finding new ways to find new customers. So we're building a parallel site and platform while the existing site is still up, which will have a lot more. The UX and UI will be way better and way smoother for most folks. We're actually going to be implementing microloans, so people won't have to actually spend their Bitcoin if they don't want to. We're going to be offering that as low as, I believe, $1,000. Don't quote me on that, but I think we're going to try and get it really low, which is hard to do. But for us, we're implementing things to try and continue to stay relevant. For us, we have to keep preaching this spend and replace, and shout it from the mountaintops, because if we don't spend our Bitcoin, we really, the business won't work, and there won't be benefits to the world that we see could happen if people started using our BTC.
Mm-hmm. Yeah, that makes a lot of sense, and especially when you're an online business, when you're in an online business that is involved in Bitcoin or crypto and travel, trust is everything, right? So I guess my question to you is, how do you make people that haven't used your service before, how do you make them comfortable sending sats to a stranger's property listing without having nightmares about like getting rugged or scammed? What is that process like? You mentioned it was an uphill battle. That would certainly seemingly be one of the climbs you would have to endure.
Well, it's really not that expensive. I mean, unless you're renting one of our villas in Ibiza for like, $5,000 a night, the majority of our listings are a couple $100. So, when we think about, hey, a quick weekend away, that's about $700, $800 for you and your family. I don't think it's that big of a hurdle. But for us, I mean, we've been trusted by some very large names in the industry. Obviously, I'm not gonna name names, but there's a lot of people in the industry that have used us, some real OGs, if you will. We are building trust every day, and I can't, it's one of those, it's not a meme, but like, trust me, bro, really doesn't work. So we're building it day by day, right? So obviously, if you have an issue, if you have a problem, you can get us on the phone, you can get us via email, you can get us on chat. We are very accessible, and we're real people who are running a real business. So, I would ask a lot of people just, to, in the beginning, have a little bit of trust. I mean, as trustless as Bitcoin is, I think we have to lean into this need for the human element of Bitcoin, which kind of gets lost. We're in this ones and zeros and binary life, but in reality, we're all real people, and we're running a real business, and we're trying to be as successful as possible. So if there's anyone out there that has any questions or concerns, please reach out. We'd love to gain your trust.
Yeah, and part of the way of, I think, with any new business, of earning that trust is getting those first few clients in the door, right? And showing like, hey, we're legit, this works. One of the ways to do that is offer lower fees. You mentioned that AirBTC's fees are lower than Airbnb's, which is a great way to get people in the door initially and used to using the platform. How much cheaper do hosts and guests come out on AirBTC, and how big of a motivator has that been to onboard, properties onto the platform and to get people to utilize the platform in the first place?
Yeah, so as far as our fees, it all depends on where you're at in the world, and some of the fees are different. Airbnb has fees for both the guest and the host. So sometimes you could be paying, including foreign transaction fees, upwards of like 29% of the total transactional cost goes to Airbnb. As far as we're concerned, we take 15%. And, we think that that's a very fair offer. And as far as a motivator, a lot of folks aren't really leaning towards the financial gain as the motivator. If you're a host now, you think about it this way, you're actually doing Bitcoin mining with your short-term rental. So you don't have to stop doing the booking.com or Airbnb. You can literally continue to do what you're doing and run a successful business for your short-term rental. But also now you can accept Bitcoin, and hopefully if you don't sell that Bitcoin in a few years, that booking could pay for a whole month or maybe a whole year worth of your expenses.
Yeah, that's very true. And you mentioned that South America has been kind of your international, but been generally your focus right now for obvious reasons. Specifically, I noticed El Salvador has become a big centerpiece of your growth. Let's talk about that. Like, what made it the obvious, place for AirBTC to kind of focus initially? And do you offer Bitcoin experiences with it too? Can I go do a ATV ride with Bukele down there? Like, tell us about that.
I think it'll be really hard for you to get a meeting with Bukele at this point. Maybe five, 6 years ago you could have made it happen, but at this point our first vertical is the short-term rentals, and eventually we will be doing Bitcoin experiences and excursions and whatnot. But as of right now, we're focusing on the short-term rentals. Eventually, we'll do real estate sales as well. But the reason why El Salvador, in specifically, has been a focal point of our business is because of what Bukele and Mike Peterson and Chimbera and everyone's been doing in El Salvador. All that work that has been done to really change the thought process of the locals. And there's still a lot of work to be done. There's still a lot of education that needs to be done everywhere in the world, really, for that matter. But, we really think El Salvador is one of the safest places on the planet. And we think it has a lot of potential for future growth as far as the tourism sector is concerned. I think they're number like 4 or 5 on in the world of fastest growing tourism economies. And I'll tell you from firsthand experience, I have been down to El Salvador for 3 years now. And in the beginning, I was like I was dismissing a lot of what people were saying on the ground because, even the U.S. State Department's website would say, oh, it's very dangerous. But I went down there and I felt like the people were so welcoming. There was no crime that we were impacted by whatsoever. And the whole vibe was very very amazing. So we think El Salvador is has a great future ahead of it. And what Bukele and the team has been doing there, it's unmatched in Central and South America. And that goes to the fact that the Colombian president is going to meet him, and people from Guatemala and all these places. Hey, what are you doing in El Salvador? How did you do it? Right? Everyone wants to know the game plan because they really have been doing amazing work.
Yeah, and with El Salvador specifically being so Bitcoin friendly, and you having El Salvador right now as one of the main locations that you focus on, given all of these reasons, what have you seen in terms of usage from in El Salvador compared to other parts of the world right now that might not be quite as Bitcoin friendly? Because it kind of feels like, given the ecosystem in El Salvador right now, that could kind of tell you as to how this is going to be received eventually on a world scale. So how is business in terms of rentals in El Salvador compared to other parts of the world? I got to imagine it's booming comparatively, right?
Yeah, it's 10 to 1. And I think that's from the simple fact that the hosts themselves are already been orange pilled, right? So there's so many people that are all over this planet that are orange pilled, but some of those people don't own property. But in El Salvador, a lot of those people that have been orange pilled over these past 5 years or so really understand that the value that Bitcoin can bring long term. So that's why we've gotten more hosts in the area. We actually also have a hotel chain. We have Hilton and Holiday Inn in El Salvador. And it's kind of interesting to think about those big names accepting Bitcoin for payment. But it's in El Salvador. So things are different there. It's like the first mover advantage, right? But we really think that eventually if the world is going to be changing in the direction that we think, there will be more and more and more properties and property owners that see the light. And as they do, we will have more offerings worldwide.
Yeah, no, that thought process makes a lot of sense. And actually right now here we can see we have some of South America here, so we can see how the interface actually looks. So for instance, I wanted to click on, okay, so yeah, we got a lot of listings here. Victor, let's click on one of these here. I want to kind of see what the page looks like and show our audience what the experience of this of AirBTC is. So if we clicked on one of them here, okay, so we got a couple different properties here. Let's click on any of those. Yeah, there we go. $28 a night. That's a good deal. So I noticed that you have prices denominated in fiat currently. Is that to kind of help aid with that transition? Because I don't think the world thinks about prices in Bitcoin right now. And do you ever think you would switch over to fully native Bitcoin prices, Jake, or are you going to leave this for now as the world still wraps their head around the world denominated in Bitcoin?
Yeah, I'm not a genius, and I would imagine most people can't do that quick math and say, oh, it's cost 100,000 sats per night. Eventually when we get to a parity, a dollar sat parity, I would totally be all about it. But I don't think the human brain can actually put together those quick math equations. So we actually, if in some places on our site, we have denomination in sats and in USD, so you can see what they both look like. Not through the map function, but we will be showing that on our future site.
Yeah, no, that makes a lot of sense. I've been in Bitcoins for a minute now, and I don't think of things yet in prices or terms of sats yet, so that's super helpful. And here's actually one of the listing pages right here. This looks great. Yeah, this looks really nice and professional. This is an awesome, this looks exactly like what I would hope to expect from a site like this, so it seems pretty easy. Now, you've been operating for just over a year now, Jake. What types of listings so far are proving to be the most popular with clients that use the site? I saw you had $28 listings, which feels good for like a budget backpacker type deal. Are family-friendly homes are very popular? Luxury Bitcoin beach villas, maybe you have those crypto bros renting those. Who's been the biggest user of your platform so far?
Yeah, so I would say that luxury sector is definitely pushing a portion of our growth. We don't want to dissuade people from posting one of their homes or one of their apartments or whatever. The idea is that we need to have optionality. So when we think about, let's just say, a certain town, for example, in El Salvador, we want to have a 1-bedroom for very low price. We want to have an opportunity for a 2 or 3-bedroom house. We want to have something with a pool for a family. We want to have, the more options we have in a certain area, then it gives Bitcoiners less of an opportunity to say, oh, well, they didn't have what I wanted. I'm just going to go to Airbnb, right? So our idea is to create value through optionality, and hopefully we can get Bitcoiners to actually, start spending Bitcoin.
Yeah, and as you continue to grow, you said you've got around 500 properties worldwide already, which is amazing. What's your roadmap for scaling that up? And are there any markets you're specifically targeting next? The US is getting regulatory-wise pretty friendly. Are we going to start seeing some San Francisco Airbnb listings in our own backyard here soon? Or is there a certain part of the area you're hyper-targeting outside of South America right now?
Yes, we see a lot of growth opportunities as circular economies pop up globally. So when we think about Indonesia and Bali and these kind of places, and the Bitcoin Bali House and the initiatives that they're having, guys starts funding these projects globally, and it's almost an opportunity for us to get in with them as they grow, right? And it's an opportunity to get some funds from outside of the circle to continue to bolster that economy. So we get someone from Iowa, to head to Indonesia and stay at the Airbnb. Then if they have an opportunity to spend their Bitcoin within their traveling days or nights on dinner and excursions and whatever else they want to do, we really feel like that's an opportunity to grow the Bitcoin economy wherever it may be globally. We don't have a main focus outside of Central and South America right now because we think that the growth potential is just unmatched globally, but we're not going to dissuade people from hosting, anywhere in the world.
Yeah. I just wonder, you think of the places a lot of people in the crypto ecosystem tend to go to, right? Like Miami, the UAE, Hong Kong. I'm just wondering, maybe you don't say you hyper focus, but does it make sense to target those places where people are already utilizing Bitcoin or have made money using Bitcoin, right? I wonder, do you have any places in Asia right now that are available, for instance?
We have things in Japan and Southeast Asia.
Cool.
We don't really have anything in China or Singapore or Hong Kong. I do see Singapore as, growing quite rapidly as well. And there's a lot of digital nomads that are traveling in the area for work. And
right.
So, yeah, I mean, we think Japan actually in that region has a lot of growth potential as well. And the tourism, a lot of Americans like to go there because the exchange rate is kind of good at the moment. So yeah, we think that there's some growth potential in Japan for sure.
Yeah, no, absolutely. Japan's great. I'll next time I go back, I'll have to hit up one of these AirBTCs. I love Japan. Something we talked about and kind of touched on earlier is one of the biggest challenges for Bitcoiners is convincing them to actually spend their Bitcoin. So as someone who is running a Bitcoin-denominated business, what have you learned about kind of breaking through that never spend your Bitcoin mentality to get people to actually, in fact, spend it with your team at AirBTC?
It's really been hard. That we've got so many things against us, because we get, for every one podcast that I do or 10 that I do, Michael Saylor does like a 30-minute spot somewhere and talks about how it's the best savings technology on the planet. And everyone's convinced that they should never sell their Bitcoin. I think, and don't get me wrong, I think hodling Bitcoin is a way for a brighter future for you and your family. I would just say that hodl 95% of your wealth, but you also, if you're going to go on vacation or if you're going to go out to eat, or if there's an opportunity for you to spend your Bitcoin and it's a comparable value, we should be doing that because you're actively making your investment more tangible in the future, right? And I think it's an uphill battle that I'm willing to fight, and everyone on the team at AirBTC is willing to fight, because we think that not only is it good for our company, it's good for Bitcoin, and what is good for Bitcoin is good for the world.
Right, absolutely. And you yourself, I think you mentioned it earlier in the show, talked about the idea of spend and replenish as kind of a mindset. How does AirBTC actually help make that cycle happen in real life?
Well, we give people an opportunity to spend their Bitcoin, and you can buy sats on any exchange. It's so easy in the United States. You can go on River, you can go on Strike and just set up automatic buys. You can, there's so many ways to do it, and it's getting easier and easier for the consumer. So we're definitely an outlet for folks to want to spend their Bitcoin. And, we think education is a big part of this. So we don't expect people to just jump on board, without any understanding of, what we're talking about. If we're open for discussion, if anyone wants to have a chat about why we think it is good, there's so many points that we could highlight. But in the grand scheme of things, I think back to Laszlo in Jacksonville Beach, Florida, when he bought 2 pizzas for 10,000 Bitcoin. I would dare to say that we wouldn't even be here. We wouldn't even have a discussion about Bitcoin, because who knows if we'd get to this point if he didn't make that transaction happen. And Satoshi was very concerned about miner centralization and about distribution of Bitcoin, that he sent an email to Laszlo like, hey, dude, you have to get rid of some of this Bitcoin. You've just mined too many within this short amount of time. And, we need to get back to this understanding that we have to distribute as much Bitcoin as we can to everyone in the world if we can do that. And AirBTC gives us an outlet to do so.
Yeah, you made an interesting point about Laszlo Pizza Bitcoin guy, because we think of him a lot of times in terms of like, oh, that sucker that spent $10,000 or 10,000 Bitcoin on 2 pizzas. But your view is like, and I understand it, I never heard of this before, but might have actually been very important to getting the word out about Bitcoin. Because I remember that story very early in Bitcoin's journey was huge news fodder, and everybody talked about it, and that probably played a very crucial role in getting the word out about Bitcoin very early on, despite the fact that we kind of joke about it now. The man was a pioneer. So I'm sure Laszlo appreciates your words about that. And you mentioned too about education, which we know in this space is always so important. You have all of these different hosts across the globe that are working these, different places that you have that people can rent out. How important is it to training hosts, to kind of getting them on the Bitcoin standard too? Because it sounds like you got to orange pill the hosts, and then the hosts help orange pill the clients. Like, what is that process like for you guys?
Yeah, it's a very arduous process. I mean, you have to think we're such a small team, underfunded, but we lean on our partners, and we partner with Me Premier Bitcoin. I don't know if you've ever heard of those guys, but John Dennehy and the crew down in Central America, and actually they're global now. I mean, they're everywhere, and there's cohorts popping up all the time. We think that the education process is actually it's an integral part of this. And what's kind of cool is Me Premier Bitcoin, we've partnered to get one of their booklets, their educational books in each one of our AirBTCs in El Salvador, and give people an opportunity to learn more about Bitcoin when they're there. And it's also an opportunity for the host to understand more and more every day. The idea is that we get someone on board to accept Bitcoin. I think that's the first step as a host. You don't really have to know much. If you want to run a successful short-term rental business, you will not stop doing Airbnb. You will not stop doing Booking.com. You should have every channel humanly possible to try and get bookings, right? That's the end goal. But, we're giving you a slice of, the most amazing people on the planet, right? We're giving you access to Bitcoiners who are going to come to your place and they might explain more about Bitcoin than you would ever know from a 15-minute podcast or educational programming.
And as you're teaching these hosts and getting everybody on board with this circular Bitcoin economy, do you also, specifically like in a place like El Salvador, where a lot of places and people do accept Bitcoin, do you have like a vendor list so that you stay at the place and it's like, hey, not only did I pay for this AirBTC in Bitcoin, but here's a list of vendors in the area for restaurants, what have you, that also accept Bitcoin? Is that folded into your plan yet as part of this Bitcoin circular economy and helping promote that?
Yes, for sure. And a big shout out to my boy, Brady, who created our travel guides. He created these travel guides from, so if you go to, let's just say Bitcoin Beach in El Salvador, when you make the booking happen, we send you an email, confirmation email. You also will get an ebook on how to travel like a Bitcoiner. You also will get a tour guide, guidelines of the area. So the best restaurants that accept Bitcoin, the best tour operators, so these kind of things really give a shining light to people in the Bitcoin space. And, we think that it's an integral part of travel is, if you trust Fromers or these other travel guides, this is very, very similar to that, but it's Bitcoin centric.
I love that. I love that. You can find out where all the other orange people are in the world as you're traveling. We know a lot of them are in El Salvador, but as someone who runs this international business, I gotta ask, have there been any surprises to you in terms of countries where people are really jumping on board and are eager to embrace Bitcoin as payment for a B&B type platform outside of El Salvador? Like, what are the numbers telling you? Are there any parts of the world that you're keeping an eye on specifically where it seems like Bitcoin adoption might be ramping up based on the sales you're seeing online?
Yeah, for sure. I'm not sure if we can curse on this show, but
yeah, you can curse. Go for it.
Okay. I think it's whoever's getting fucked the hardest, they're the ones that are going to be moving the quickest, right? So if your money is getting shittier and shittier by the moment, then you're going to want to find an alternative. So South Africa is definitely one of those opportunities. The rand is just dog shit, and we think that South Africa has a very, very big opportunity for growth. And we see a lot of hosts that are wanting to come into South Africa's marketplace. And in particular, Cape Town and in Stellenbosch, I think we got like 20 requests over the past 2 days about listings in South Africa. So yeah, I'm very bullish on Africa in general, and I think that they need it the most, man. They're a lot of these African countries, we experience inflation at 1 and 2 and 3 and 5%. But the folks in Africa, they can just wake up overnight and their money is literally worth 90% less. We want to help those people out the most, the people that need it the most, and I hope that the everyday average American can actually get on board and do their part, because I think America is a great opportunity for folks we adopt new technology the quickest, I think, in most cases. But this one, we have to figure out a way to get people to spend their Bitcoin. And, we think AirBTC really does provide such an opportunity.
Yeah, and that makes a lot of sense. It kind of feels like fiat failures, or Bitcoin adoption is often the canary in the coal mine for like failures in fiat around the world. And we're starting to see that here in the United States too, with all this pro-Bitcoin legislation that seems to be happening. Obviously, number go up has been a significant development this year. And yeah, that makes a lot of sense where, fiat's becoming worth less. People start turning to alternatives, and that alternative is Bitcoin. So Jake, we got a game we play here with all of our guests. So the game is just for shits and giggles, if you will. If you ever seen The Price is Right before, we play that kind of with Bitcoin, but here's the game. So all of our guests, we have them give us their price prediction, not financial advice, just for fun, for Bitcoin by the end of this year. And whoever gets the closest to it, Price is Right style, we're gonna send a Roxom Patagonia to at the beginning of the new year. So Victor, can we bring up the board here really quick? So here's our leaderboard with some of the popular figures that we've had that have made price predictions so far. So you'll see I'm on kind of the conservative end. I think about 142, 143 by the end of this year. But then we have some like, we don't have Newt in there. Newt Svanholm, I know, was in the 400,000s. Tim Kotzman said about 330 last week. What is your price prediction for Bitcoin by the end of the year, and why?
Well, first, I'd like to say, Newt, I'd like some of that, whatever you're smoking, bro. Let's, I want to see it. No, he is the best. I love him. He's like one of the coolest guys on the planet. I spent some time with him. But yeah, so for me, I think that we're looking at 186 by December 29th, or, at the end of the year. And the reason why I think that's going to happen is the M2 money supply. I think what's going to happen is we're going to see a rate cut soon, right? We're going to see maybe half a percentage point, maybe 50 bips. And if that does happen, if it's more than that, we could well go over 200 by the end of the year. And, I don't think this like leg up situation is going to happen in Bitcoin. I think we're literally going to see, as Samson Mao calls, like a Godzilla candle or a God candle. I don't know. I'm always
the
confused.
Omega candle.
Omega. Okay.
Yeah.
But at the end of the day, I think it happens all at once. It's going to happen over a 2-month period, and you're going to look back and go, oh my God, 115 was cheap. So I think by the end of the year, we'll definitely be in the 180s.
So your official prediction, though, is it 187, so we can put you on the board?
Yeah, 186, right? Yeah.
186, okay, 186. All right, got it. Put it on the board, Victor. Beautiful. All right, let's get back to camera one here, gang. All right, so Jake, our time here today is starting to come to a close. But before we do, one more time, I'm sure there's plenty of people in our audience that are like, whoa, I can rent out places all around the world using my Bitcoin. Tell me more. So one more time, where's the best place for them to go so that they can check out all the listings you have around the world? And then for yourself, if they're interested in you and your opinions and hot takes, is there a good place they can follow you, perhaps on X, Twitter, whatever the kids are calling it these days?
Yeah, so I would encourage everyone to go to airbtc.online and go register an account. It takes two minutes max. If you would like to host a place anywhere across the world, we'd love to get your listing. If you'd like to be a guest, we would encourage you to also go register. And then if you want to see our hot takes and our memes and whatnot, go to our X profile, AirBTC Online. We're also on Instagram and everywhere else where people consume media. As far as my hot takes, I control some of the Twitter accounts, so a lot of the hot takes happen there. I also have recently started doing LinkedIn, so I would encourage no one to use LinkedIn ever. That is my official stance on LinkedIn. But yeah, I would appreciate everyone to go on our website and register an account and really follow our project, and whatever you can do to get the word out about getting people to spend and replace their Bitcoin will be very, very helpful for everyone, not just including AirBTC.
Yeah, absolutely. And we're really appreciative of you joining us today, Jake, to tell us more about that. And frankly, for helping promote the Bitcoin circular economy and helping us get a little bit closer to that Bitcoin denominated world that we're always talking about. And I think it'll be here eventually, but with the efforts of people like you, it's going to be sooner rather than later. So Jake, thank you so much for joining us in the Blockchain Report today. It was so fun having you on. And I can't wait to see what new listings you guys have popping up on AirBTC, because I think you guys are really onto something over there.
Thanks, brother. I hope you have a great day, and I appreciate you having us on. We'll do it again soon, huh?
Yeah, would love that. Sounds good. All right, enjoy the rest of your week, Jake, and thanks for stopping by. All right, we're taking a quick break here at the Blockchain Report, but when we're back, we're going to go over some of today's top news stories, and we'll be having our second guest of the day joining us in just a bit. You're going to have to stay tuned to find out who it is right here on the Blockchain Report when we return.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
All right, welcome back. It's time for this morning's Bolt Run, where we go over the top stories of the day. Let's get to it. We got a lot to talk about. First up, Michael Saylor has done it again. The man wakes up in the morning, brushes his teeth, and buys another bag of Bitcoin like it's toothpaste. This time, Strategy swooped up another 525 Bitcoin, worth about 60 million bucks at an average price of around 114.5K per coin. Now, if you're thinking, wait a second, 525 Bitcoin, that's it? Well, yeah, you're right, that's it. For Saylor, this is basically a snack pack. Usually he's ordering the whole family-sized Costco pallet's worth. The smaller bite, though, didn't stop him from bragging. He posted that Strategy's Bitcoin stash now sits at a cartoonish 638,985 BTC. That's worth over $73 billion at today's prices. And with that, Strategy is up a nice 26% year to date on its Bitcoin hoard. Not bad for a company whose business model is basically forget software, let's go full dragon hoarding mode. But not everyone is cheering. Angel investor Jason Calacanis took to the internet to warn investors to stay as far away as possible from Strategy. According to him, if you like Bitcoin, maybe skip the middleman and, buy it yourself. He claims that Saylor's relentless stack sats at all cost strategy is bad for the Bitcoin brand itself. Adding insult to injury, Strategy recently flunked out of the S&P 500 despite meeting all of the criteria. Investors were not amused. The stock fell nearly 2% in a few hours. Even JP Morgan analysts called the snub a major setback. So yeah, the market told Saylor, thanks for playing, while he responded by tweeting a picture of an orange iPhone 17 Pro, because nothing says I'm still bullish like matching your smartphone to Bitcoin's logo. Now, despite the criticism, the setbacks, and the eye rolls, the takeaway here is the same as always. Saylor is not giving up on Bitcoin. And when the price per coin hits six figures and more, which it has, he's starting to look less like a lunatic and more like the guy who showed up early to the clearance sale. And speaking of Saylor, he's actually in Washington right now because apparently buying more Bitcoin for Strategy just wasn't enough. This time, he wants the entire U.S. government to join him in on the fun. Saylor, Marathon Digital CEO Fred Thiel, and more than a dozen other Bitcoin advocates are on Capitol Hill this morning. They'll be at a roundtable hosted by Senator Cynthia Lummis and Representative Nick Begich, the Republican co-sponsors of the Bitcoin Act. Yeah, the actual boosting innovation, technology, and competitiveness through optimized investment nationwide act. You know it's serious when they invent an acronym that spells Bitcoin. Now, if passed, the bill would direct the United States to acquire 1 million BTC over the next 5 years. That's 1 million Bitcoin, not $1 million worth, okay? Big difference. Now, the language calls for budget-neutral strategies, meaning they'll try to do this without officially spending taxpayer money. Think of it like Congress trying to buy Bitcoin, but with coupons. This builds on Trump's executive order that already created permanent Bitcoin holdings, similar to the country's gold reserves. That order also bans selling off seized Bitcoin and other crypto assets, forcing them to be locked away in a separate government stockpile. Now, the question is whether Congress can actually move this forward. So far, it's entirely Republican-backed, and Democrats have not signed on. The roundtable is expected to cover the next steps for the Bitcoin Act, plus how to convince the other side of the aisle that this isn't just Michael Saylor's personal shopping spree. Alongside Lummis and Begich, other Republicans will show up, plus execs like BitDeer's Harris Basit, and Riot's Brian Morgenstern, and CleanSpark's Matt Schultz. The Digital Power Network, an affiliate of the Digital Chamber, is helping push this forward. They're also handing out a one-pager at meetings calling the bill a bipartisan opportunity, because nothing says bipartisan like an event with 0 Democrats attending. Now, if the U.S. actually starts buying 1 million Bitcoin, the effect on price is pretty obvious. Forget ETFs, you can forget the corporate treasuries. The United States government DCAing 1 million Bitcoin would make number go up look like an understatement. Can't wait. And a new super PAC has launched with the subtle name Fellowship PAC. Their mission, pour $100 million into backing pro-innovation, pro-crypto candidates. Because in America, nothing says innovation quite like 9-figure slush funds for politicians. The group announced itself on X on Monday, saying it had over $100 million in funding from unnamed sources. Its goal is to support the Trump administration's digital asset strategy, pick specific candidates for federal office, and keep crypto companies from fleeing the U.S. for less ridiculous jurisdictions. In their own words, the PAC is designed to align the interests of crypto entrepreneurs, policymakers, and the public, ensuring trust and accountability. Or in other words, they're going to buy ads and make sure lawmakers don't accidentally outlaw Bitcoin because they still think that it's V-Bucks. And they promise that this is only the beginning. We've seen this movie before, though. In 2024, Fair Shake PAC spent over $130 million on congressional races thanks to contributions from Coinbase and Ripple. That kind of cash absolutely influenced election outcomes. Initial reports claim that the Winklevoss twins threw in money for Fellowship too, though nobody wants to confirm that just yet. A Fair Shake spokesperson even said they'd seen no evidence Coinbase is involved, and as a publication, neither Coinbase, Gemini, nor Fellowship itself would comment. What we do know is this PAC filed its paperwork with the FEC on August 7th, and as of Monday, it officially reported 0 contributions and 0 expenditures. So technically, the $100 million is Schrodinger's fundraising, if you will. But the trend here is pretty clear. Crypto money is flooding into politics. The Winklevi already dropped $21 million worth of Bitcoin, $21 million worth of Bitcoin in August to another PAC backing Trump's agenda, trying to secure a Republican majority in Congress. And it's not only Republicans who are benefiting. Democrat James Walkinshaw just won a special election in Virginia after a Fair Shake affiliate spent more than $1 million supporting him in the primary. So the money goes both ways, but the strategy is always the same. Buy influence now, reap regulatory clarity later. And if crypto keeps writing checks this big, don't be surprised when your local Senate race looks more like a Coinbase marketing campaign. And it looks like the market has been anything but kind to shares of Kindly MD as of late, as their stock price has gotten absolutely wrecked. We're talking down 54% to $1.26 after the SEC waved its magic wand and unlocked restricted shares from a $200 million fundraising deal. So what does the CEO do when his company's stock just absolutely tanks? Well, he writes a shareholder letter basically saying, yeah, you might want to leave. David Bailey told short-term traders point blank, I encourage you to exit. Not exactly the kind of motivational poster you'd hang in your office, but refreshing honesty for Wall Street. This all started when the SEC approved the S3 registration tied to that $200 million pipe deal. Those shares were originally restricted, but now they're free to dump on the open market, and dump they did. Trading volume blew past 89 million shares, the highest since February's mysterious moonshot when 219 million shares suddenly changed hands. Bailey spun it on X, though, saying he was humbled by the support. The stock is on fire, and not the good kind. At $1.26 a share, it's barely above the days in November of 2024 when the company regularly closed under $1. And let's not forget NASDAQ's rules. Stay under $1 for 30 straight days, and you get a warning and a 6-month clock to fix it. It hasn't happened yet, but Naka's officially playing with fire. Here's the ironic twist, though. The company's market cap is now $504 million, while its 5,700 Bitcoin are worth $663 million. Or in other words, the stock is trading at a discount to the Bitcoin that it actually owns. You could basically buy the company for less than the value of its treasure chest. The publicly traded healthcare outfit only became a Bitcoin treasury company a month ago after merging with Nakamoto Holdings. Now, Nakamoto runs the Bitcoin side under the Naka, aka ticker. Bailey insists that this is not a gimmick, calling the company's mission to build the defining Bitcoin native financial institution. Noble goal, for sure, but in the meantime, the share price looks like it got mugged in an alley. Bailey is telling weak hands to scram so he can keep building with aligned backers. The problem is, when you encourage everyone to exit, sometimes they actually do. But hey, when the company's Bitcoin is worth more than the entire company itself, that's a bullish case hiding in plain sight. It's Wall Street math at its finest. Sell the stock, buy the Bitcoin. All right, we're taking a break, but when we're back, we're going to be joined by our second guest of the day, so stay tuned for that as we talk more Bitcoin coming up after this. All right, everybody, welcome back to this morning's Bull Run. And joining us for our Bull Run today is our second special guest of the day. He's the gentleman who's been at the front lines of Bitcoin's toughest but most important battlegrounds. We, of course, are talking about mining. He's part of the team over at Blockware, a company that's helped move hash rate away from China and into the good old US of A, sold over 400,000 ASICs and built industrial scale facilities across the country. He's also the head of research, the voice behind Blockware's podcast, and an author making the case that Bitcoin isn't just sound money, it's the backbone of traditional values and the future of financial sovereignty. Let's give a big blockchain report welcome to Mitchell Askew, everybody. Welcome to the show. We're super thrilled to have you in front of our studio audience. How are you this morning?
Thank you, Hank. That was an epic intro. I feel like the UFC fighters when they're walking towards the cage and you've got the smoke in the audience and everybody cheering. That was great. So like you said, I think you nailed it. I'm Mitchell Askew. I work at Blockware. We're one of the top Bitcoin mining service providers in the world, and I'm super excited to be on the show today.
Yeah, we're super pumped to have you. I had to give you your appropriate Bruce Buffer intro if we're going to do. We get a lot of UFC fighters actually on this show, are Bitcoiners now, so maybe that's where I picked it up. I don't know. Before we get into the news today, Mitchell, for people that might not know much about you, aside from the intro I just gave you, can you just give us a quick snapshot of who you are and how you found your way into Bitcoin and Blockware?
Yeah, so I'm 25 years old. I live in North Carolina, and I've been in Bitcoin for about 5 years now. I found it when I was a college student. It fixed a lot of the problems I saw with the world. And once I realized that Bitcoin has a finite supply and it can't be influenced by governments or other third parties, I was hooked. And so I spent the last part of my college years trying to find my way into the Bitcoin space. And I was able to get my foot in the door at Blockware, started out as an unpaid intern. I put in my proof of work and then been able to take on more responsibilities within the company over the last 4 years.
Amazing. Well, we're excited to hear more about that journey in just a bit. But right now, we're going to talk news. So I'm going to read the first story. Hang tight. We'll call you back to talk about it in just a sec. Sound good?
Yes, sir.
All right, let's rock and roll. Well, next up in Washington, President Donald Trump has decided that running the country isn't enough. He also wants to run the Federal Reserve like it's his personal HR department. He's filed an appeal to remove Fed Governor Lisa Cook, claiming she engaged in criminal conduct over mortgage documents. Cook, she fought back, saying the firing exceeded presidential authority and violated her due process rights. A district court agreed and blocked the removal. Now Trump's DOJ is arguing that when a statute says removal for cause, the president gets to decide what cause means and nobody else can question it. That's one way of saying, because I said so, but presidentially. But here's where things get a little messy. New evidence surfaced that actually backs Cook. A May 2021 loan summary shows her Atlanta property was correctly disclosed as a vacation home, which makes the government's mortgage fraud claim look about as sturdy as the "if the glove does not fit, you must acquit" defense, but it worked for him. So yeah, we've got a legal battle over the Fed, presidential powers, and whether due process means anything anymore. Meanwhile, the actual economy is watching all of this and wondering if the dollar is supposed to feel stable right now. Because here's the kicker. The Fed is expected to cut rates this week. Markets are pricing in a 96.4% chance of a quarter point cut, down to 4% to 4.25% from 4.25%, and a slim chance of a half point cut. Pretty please. The first rate cut since December of 2024. Now, RSM economist Joe Bruselas said, yes, traders will get their cut, but don't expect 3 more cuts before the year's end because, shocker, the data doesn't seem to support it. Bringing Mitch back. Mitchell, we've got Trump treating the Fed like it's his personal HR department. How much does this political tug of war actually shake the confidence in the U.S. dollar system? What do you think?
From my perspective, it doesn't change it at all because I already had zero confidence in the U.S. dollar system, right? I think this is a quintessential tale of how unpredictable and volatile the fiat system actually is. You know, you put your best minds in the world together and you can't exactly predict what the Fed's monetary policy will be 6 months from now, 12 months from now, let alone 10 years from now. Versus with Bitcoin, we know exactly what the monetary policy will be today, tomorrow, 10 years, 100 years into the future. And so I think a lot of, in my opinion, the conversation around the Fed is mostly smoke and mirrors. I think by design, they're going to have to cut at some point in the future, whether it's this week or next month or a year from now. It'll happen eventually. They're going to have to get interest rates back down to zero, and it's just a matter of when.
Yeah, absolutely. I mean, this will, though, be the first rate cut for in the last year, right? So from a Bitcoin perspective, how do you see rate cuts feeding into demand for hard assets like BTC?
It's absolutely bullish in the short, medium, and long term. So during Q4 of 2024, we saw them start to cut rates and Bitcoin rallied from 60K to 100K. And, you know, skeptics might say that the future rate cuts over the next couple months are already priced into the market, but I disagree. I think mostly because we've seen gold, which is the other form of hard money, go on an absolute tear this year. Gold's up some 40% odd. I think that's a forward-looking indicator that Bitcoin's about to follow suit.
Yeah, I would have to agree with you on that. It seems like the writing is on the wall. And speaking of which, right, if you zoom out, how should Bitcoiners interpret this combination of Fed chaos and rate cuts? Is it just noise, or is it another flashing neon sign to all of us that the fiat system is very much creaking and wheezing?
I think it's a little bit of both. So I'll start with why I think it could be noise. And that's because the long-term interest rates matter far more than the Fed's overnight rate. And if you'll flash back to January of this year, when Trump took office and the new Secretary of the Treasury, Scott Bessent, took office, they said explicitly multiple times their goal was to get the 10-year Treasury rate down. And a lot of the actions they took earlier in the year with the tariff tantrum and other sorts of things, the Doge attempting to cut the federal spending, it was all in an effort to get the 10-year rate down. Because if they can get the 10-year rate down, there will be more borrowing in the economy, mortgage rates will go down, there will be more economic activity will get stimulated there. But they failed. The 10-year rate's basically where it was at the start of the year. And so it seems like plan B is to pressure the Fed politically into lowering the overnight rate in hopes that maybe the 10-year would follow suit. So I think in that sense, it's a bit of noise, and the 10-year is struggling to get down, and that spells trouble for bondholders who've already had a pretty nasty past couple of years. Especially when you consider real inflation-adjusted returns. Bondholders have gotten absolutely smoked, and it doesn't seem that they're going to get any reprieve anytime soon. But second is kind of towards my point at the top of the show, which is This is indicative of the underlying issues with the fiat monetary system. There's a famous chart out there which shows the Fed funds rate, and then it shows the expectations. And the expectations are always off. They're always having to constantly adjust. The smartest investors and analysts and quants in the world can never forecast exactly what the Federal Reserve is going to do. Bitcoiners already understand this, which is why we're fully ported into sound money with a predictable supply. But I think it is a sign to the rest of the world that's not fully convinced of Bitcoin yet. This is just another piece of evidence to point to and a problem that Bitcoin solves.
Yeah, it seems like right now the evidence just keeps mounting for Bitcoin's use case, and we're seeing it in real world time. And our next story is going to touch on that even further. So hang tight there, Mitchell. We'll be back with you in just a second, because BlackRock, the world's biggest asset manager, the evil empire, just bought over $1 billion worth of Bitcoin in a single week. According to Arkham's on-chain data, the king of TradFi is back at the Bitcoin buffet, and they didn't even bother with a salad this time. The purchase signals exactly what it looks like. Institutions are bullish again, and they're not hiding it. Rick Reeder, BlackRock's chief investment officer of global fixed income, says the U.S. is entering a new economic paradigm, which sounds like consultant buzzword bingo, but what he means is that productivity, technology, and innovation are changing the old growth versus jobs equation. Or in plain English, companies are making more money without having to hire more people. Artificial intelligence and automation are giving firms efficiency steroids, higher output, same workforce. Reader calls it the beginning of a new era in workforce productivity, and apparently a new era of billion-dollar Bitcoin buys. In a recent interview, he painted a picture of markets that are weird but favorable. He said that equity technicals are crazy, with massive cash piles on the sidelines, relentless corporate buybacks, and barely any IPOs. That demand versus supply imbalance is pretty extraordinary, according to him. He even pointed out that if you take Tesla out of the numbers, the so-called Magnificent Seven still posted 54% year-over-year growth in 2024. On the fixed income side, he thinks that the Fed can cut rates eventually, but even before that, investors can still lock in 6.5% to 7% yields. Not bad for the allegedly boring part of the portfolio. And if you're worried about volatility, Reader says you don't even need to take on heavy downside risk in equities right now, thanks to the current setup. He calls that a pretty good environment. Bringing Mitch back. Mitchell, BlackRock quietly bought over $1 billion in Bitcoin in a single week. What does that tell you about institutional conviction compared to retail sentiment right now?
This is the signal. I'm glad we're discussing this article, because one of my thesis is that Bitcoin is going to bore everyone to death on its way to $1 million. We can see just over this summer, Bitcoin has treaded sideways around $100,000 to $120,000 per coin, which, if you just put yourself in the headspace from a year or 2 years ago, we would all take that. But retail investors are very quick to get bored. They have a shorter time horizon. But the signal is that the institutional investors like BlackRock have been stockpiling up during this sideways summer. So while a lot of the retail, and you can see this on chain, long-term holders have sold a good amount of coins into that pump to new all-time highs about a month or two ago when we went to 125K. We saw long-term holders sell into that. But meanwhile, the big fish are continuing to acquire Bitcoin, and very much this $1 billion worth of acquisition in a single week from BlackRock is very telling of that.
Yeah, and how do you think these big acquisitions from these monster, institutions comes into play in terms of Bitcoin's cycles, right? Like, we've seen these halving cycles through Bitcoin's history that have seemingly been pretty consistent. I mean, the alpha play hasn't been the same, but the number go up over that 3.5, 4-year cycle has been pretty consistent. Do you see that continuing going forward, or do you think we're at an interesting inflection point where the cycle theory might not exist the same way it used to?
It will definitely not continue going forward, and I've got a few reasons as to why I believe that. First, I do think the creation of the ETFs in January of 2024 marked a structural shift in Bitcoin and its main cohort of investors. So it did bring in this wave of institutional investors who couldn't buy Bitcoin before. They couldn't buy Bitcoin and keep it on an exchange and self-custody. They needed a structured, securitized product like this. And fundamentally, they behave very differently than the retail investors of old. And so what we've seen since the creation of the ETFs is Bitcoin hasn't dropped by more than 30%. It had a 30% roughly drawdown from 74K to about 49K in 2024. And that's been the biggest dip in Bitcoin's price since the ETFs were created. And this BlackRock acquisition this past week is a good example of why this happens, is because they're constantly allocating capital. They are passive investors. They are constantly deploying capital into Bitcoin. You can see this on the on-chain data. So since the ETFs were created, realized cap, which is effectively an on-chain measure of inflows, has been straight up and to the right. Prior to the ETFs, we would see cyclical behavior in the realized cap. So that would be, periods of increased adoption or retail FOMO, however you want to describe it, followed by capital departing from the network. So realized cap would go up and it'd go down, go up and go down, and price would follow suit. But what we've seen since the ETFs were created, it's just straight up and to the right. Bitcoin's constantly receiving new capital inflows into the market. Now, how the market reacts to that may vary over time, and that's why Bitcoin can range from 100 to 120K like that. It's still volatile, but it's following capital inflows much more closely. And secondly is the actual quantitative impact of the halvings is basically nothing at this point. The 2012 halving, if you look at the amount of the drop in supply issuance relative to the circulating amount of Bitcoin, it was noticeable and it had an effect on supply and demand dynamics. But fast forward to the 2024 halving, that drop in Bitcoin from 900 Bitcoin a day getting mined to 450, pretty negligent in the grand scheme of things. You've got Strategy buying hundreds or thousands of Bitcoin per week. You've got other Bitcoin treasury companies following suit. You've got BlackRock buying $1 billion worth of Bitcoin in a week. So that drop in supply issuance is pretty negligent. And so at this point, long-term holders are the primary method or catalyst on the supply side. And then these consistent inflows from the institutions are the primary catalyst on the demand side, coupled with fiat liquidity. So I think the supply-demand dynamics are a lot different now. And I don't think the halving is going to have an impact. And therefore, we're not going to see the same, every 4 years we get a blow off top followed by a 75% drop in the Bitcoin price.
Yeah, and in combination with that, how much do you think of it has to do with, you have, in previous cycles, it's been almost exclusively retail driven. And when you're playing with retail, as we saw during COVID, people kind of like to gamble. I remember Robinhood did a great job of kind of gamifying, the ability to buy stocks and crypto. But now that we have all these institutions in play, do you feel like they're kind of muting the retail degeneracy that we've seen previously, which could also impact the fact that we're not going to see these wild price swings the same way as we had in the past?
Yeah, they absolutely are. And I think 2021, that cycle is a great example of this. We had an enormous amount of liquidity in the system. They increased the money supply by 50% in a 12-month span, and everything went up. It wasn't just Bitcoin. It was all the tech stocks. It was meme coins, NFTs. There was a massive bubble in every asset class. And so Bitcoin, you may think, oh, well, it's done this every 4 years. But if you look, kind of very pointed at every bull market, you can prescribe a pretty significant catalyst. 2012 was the actual creation of exchanges and making Bitcoin very much more easy to acquire beyond just having to mine it. In 2017, we had this huge wave of adoption. You had more exchanges getting created. Plus, Bitcoin is a really small asset in terms of market cap. So it wasn't hard for it to go from a $1 billion asset to a $20 billion asset. But now Bitcoin's a $2 trillion asset. To get the same boost, I mean, a 20x, we're talking, a $40 trillion asset. That's pretty unlikely at this point. I think Bitcoin's too big to have those massive booms. But inversely, I also think Bitcoin's pretty much too big to fail. And because we have these institutional participants, they're not FOMOing in and out like the retail folks looking for a quick return. One interesting point to note when you look at the on-chain data is historically coins that have been held for 6 months or longer, they can be categorized as a long-term holder. And in Bitcoin cycles past, long-term holders were very, very rare to sell their coins. So it would take a Bitcoin going up 10x before long-term holders started to distribute. But now some of these investors through the ETFs are being categorized as long-term holders, right? But if you put yourself in their shoes, coming from a traditional finance background where they're used to the stock market giving them 10% on a good year or bonds giving them 5% on a good year, if they hold Bitcoin for 6 months and they're up 50%, that is a fantastic return. And they have and will continue to sell into those rallies. And so in 2024, early on, we saw Bitcoin go from 40K to 60K, and then it traded sideways, and then it went from 60K to 100K, and it's been trading sideways here. And I think, it went from 100K to 125K, and now it's continuing to trade sideways. And so long-term holders, which are now just the ETF holders and institutional investors, they're a lot quicker to sell into these pumps. And so I think Bitcoin's going to continue to kind of stair step higher with prolonged periods of consolidation.
Yeah, it's a really interesting inflection point in Bitcoin's journey right now, because what used to make Bitcoin appealing to all these retail traders, right, were these big, quick gains that could happen all of a sudden. But now we're seeing those kind of fade away, which is now making it more attractive to institutions and kind of sucking out some of the luster that retail really loved about Bitcoin previously. But hey, I'll take slow and up and to the right any day. As I've said in the show many times, if you told me, hey, I've got this stock, it goes up 30 to 40% every year and never loses money if you hold it over 4 years, I would say take all of my money and put it in that stock. But retail seemingly is always chasing these big gains and hasn't wrapped their head around this the way that the institutions are right now. And speaking of, with these big institutions like BlackRock stacking billions and billions of dollars of Bitcoin, while the retail crowd seems to be a little more hesitant this cycle, it begs the question, Mitch, do you think we're at a point where we could be in danger of Bitcoin's future being owned by just a handful of mega institutions like Strategy, like BlackRock, like Mara, whatever? Or is that fear overblown right now?
That fear is definitely overblown, because one of the amazing things about Bitcoin, and I wouldn't be in it if it weren't this way, is that holding more coins doesn't give you any more control over the system. And that's one of the reasons I love working at Blockware, because we make Bitcoin mining accessible to everyone. And Bitcoin mining allows Bitcoin to be decentralized. So it's not BlackRock that gets to decide which transactions get included into blocks. It's the Bitcoin miners everywhere, all across the world, building these templates and processing transactions. And then it's the node runners who, people like you and me who can run a node at home. You don't need a data center to run a node. They relay those transactions. And so Bitcoin has this system of checks and balances where just because Michael Saylor owns, I think, 600,000 Bitcoin, he doesn't have any more control over the network than you and I. And, the counter to that would be, well, they can influence the price. But if you got to think about it, who has the most to lose by manipulating the Bitcoin price? It's the people and the institutions with billions and billions of dollars worth of Bitcoin, right? The more that BlackRock acquires Bitcoin, the more incentive they have for it to succeed and for its price to go up. And so, I think we're always going to see this, I think it's called the Gini distribution, right? Where the wealthy own most of the assets. That's not going to be any different in the Bitcoinized world or the Bitcoin ecosystem. But the difference is that the playing field is level and the rules can't change, unlike the fiat system, which, as we discussed earlier, the rules are constantly changing and they're wildly unpredictable.
Yeah, and you talk about Bitcoin becoming too centralized. MicroStrategy, which owns over 630-something thousand, still only owns, I think, barely 3% of all the Bitcoin in existence. So people are thinking well, what if Bitcoin gets, a third of it gets bought up by the same person or the same company? Good luck, because at that point, the price would be so astronomically expensive, it would be almost impossible for one entity to own such a significant chunk of it themselves and be able to affect price action, to your point a second ago, which might not be in their best interest anyway. So yeah, well put. Stay tuned. We got another story. I'm interested to talk to you about this one here in just a sec, so stay put there, Mitch. Because Grant Cardone, real estate mogul and motivational yelling machine, has sold his Miami mansion for 400 Bitcoin. It's about $43 million, and the whole thing closed in only 72 hours. That's right. While traditional banking takes a week to clear a wire transfer, Bitcoin did the job faster than a Miami crypto bro can order bottle service. The sale is a big billboard that Bitcoin isn't just for speculation anymore. It's now buying actual luxury assets, and in this case, waterfront Miami access, proving that the orange coin can do more than sit in cold storage and make people fight on Twitter. And let's not ignore the celebrity effect here. Cardone has built his brand 10xing everything in sight, and now he's 10xing Bitcoin's credibility. If Mr. Cash Flow is King says Bitcoin is good enough for a mansion sale, it's basically a green light for other luxury sellers to try the same. Now it's becoming common to buy real estate in Bitcoin. Well, not quite yet, but the trend is growing, especially in the luxury market. Why? Because it's fast. It sidesteps international currency headaches, and transaction fees don't require a second mortgage. Compare that to the banks, who act like sending money across borders is some kind of Indiana Jones quest. But here's the reality check. This stuff is still for the rich and tech savvy. Average home buyers barely understand escrow, let alone how to send a transaction on chain without accidentally tipping the seller's hot wallet. Obstacles here? There are plenty. Bitcoin's price volatility can make a closing feel like you're playing Russian roulette with your net worth. Regulatory clarity is still a little foggy, and no one wants to explain to the IRS that their new mansion came with a side of capital gains confusion. And the technical side of blockchain payments is daunting enough that most normies would rather just Venmo their landlord. Still, small and medium real estate shops could benefit by jumping on this train. Accepting Bitcoin attracts the crowd of crypto millionaires who don't blink at spending 7 figures on a weekend house. Plus, blockchain payments cut out banks, speed things up, and come with anonymity that ultra-wealthy buyers drool over. Because nothing says keep the paparazzi away quite like a transaction verified by miners instead of Wells Fargo. Of course, for this to go mainstream, regulators have to step in, clear federal oversight, stronger anti-money laundering checks, and custody rules so that your mansion money doesn't get hacked, and disclosure requirements so buyers aren't blindsided by volatility. Until then, Bitcoin real estate will remain a playground for the bold, the rich, and the reckless. Bringing Mitchell back. Mitchell, what's your reaction when a big name like Grant Cardone sells a $43 million Miami mansion for Bitcoin? Is this just a flashy headline or an important milestone for Bitcoin adoption? What do you think?
I think it's a bit of both, and it's been interesting to see the Cardone brothers' journey over the last 2 years because I constantly see their Twitter profile in these spaces learning about Bitcoin, and clearly all the content they've been consuming has had an impact because Grant Cardone is selling his massive Miami mansion for Bitcoin. And this is a story that I think is slowly playing out over time, which is the transition from traditional stores of value like real estate, stocks, bonds, and gold into Bitcoin, which is the premier store of value because it doesn't have property taxes. It doesn't have, a hurricane risk like a Miami mansion might have. It's truly finite. And you don't have to constantly spend money on maintenance and repairs and, finding tenants and doing all these sorts of things. And well, let's be honest, a lot of real estate is owned not because people actually want to live in it, but because they're looking for a place to store their wealth that doesn't lose value. And so Bitcoin does that better than real estate. It does it better than stocks, better than bonds. And so we're seeing, like Mr. Cardone here selling his real estate to buy Bitcoin. I think that's a story playing out everywhere across the country. And it's making headlines in this instance because of who Mr. Cardone is. But I'm confident there's hundreds and thousands of different real estate investors around the world running the same internal calculus on whether it makes sense to own an investment property or just to own Bitcoin.
Yeah, it really kind of feels like this is just the beginning of this becoming more popular. I actually had the opportunity to sit down with Grant at the Bitcoin conference in Vegas this year, and he told me, quote, I'm going to orange pill more people through doing this than anybody in the world. So if this becomes a thing like it looks like it will in the future, he very well might be right, but I guess only time will tell on that. All right, stay tuned. Mitch, we got one more story, and I'm going to bring you back because Pantera Capital CEO Dan Morehead went on CNBC and dropped a casual bombshell. He thinks Bitcoin could hit $750K within the next 4 years and maybe a full million during his lifetime. Pantera, by the way, was the first Bitcoin fund in the world, FYI. Back in 2013, when Bitcoin traded at $104, they called for 5,000. They, of course, were mocked, and then they were right. Last year, they even predicted $740K, aiming for 2028, but admitted it might still be a little optimistic at that point. Now, Morehead says it could happen even sooner, and the data, it backs him up. On-chain numbers show Bitcoin inflows in the last 18 months have blown past everything in its first 15 years. Between 2009 and 2024, Bitcoin absorbed $435 billion in capital. Since 2024, another $625 billion. That's more money in a year and a half than in Bitcoin's entire first decade and a half combined. The realized cap, which values coins at the last price they moved, has now shot past $1 trillion. The reason? Spot ETFs. They've brought in waves of new capital, making it easy for traditional investors to buy Bitcoin without touching a wallet. That untapped money is pouring on in. At the same time, Glassnode says most investor groups are in a neutral to selling mode. So while fresh capital is flooding in, early adopters are still cashing out. That tug of war explains why Bitcoin can attract $625 billion and still hover around 115K. Right now, Bitcoin is trading right around that level after hitting a high of 116.8 a few days ago. It's been red for 3 straight days, down almost 1% in the last 24 hours, and traders are also eyeing the Fed Reserve, which is expected to cut rates by 25 basis points this week, with more cuts possible in October and December. Inflation numbers aren't exactly helping. CPI jumped 2.9% in August, the biggest monthly spike since January, with core inflation at 3.1%. So the macro backdrop is a little rocky, but the inflows are historic. In the past, small inflows could double Bitcoin's price. Now it takes hundreds of billions to move the needle. And yet the needle keeps on moving higher. So when Dan Morehead talks about $1 million Bitcoin, it isn't hopium, it's math, history, and the single biggest inflow cycle Bitcoin has ever seen. Combine that with ETFs, Fed cuts, and a government openly debating a 1 million Bitcoin reserve, and the only logical conclusion is that this bull run has barely even started. Mitch, Pantera says that Bitcoin could hit 750K in 4 years. Do you think these bold price targets are actually helpful, or do they set unrealistic expectations? What do you think?
I think they are helpful. And if you're trading Bitcoin off the words of, a single person predicting the price, then you can't be helped. That's your own fault. But when taken in the aggregate, all of these hedge fund managers and institutional capital allocators, none of them are saying Bitcoin's going to zero, right? And that was the tune just a couple of years ago. I think 2022 FTX went under. Everyone thinks Bitcoin is the same as all these other cryptos. You weren't seeing these bold price predictions. I think they're really more of a symptom of a change in sentiment among some of the wealthiest individuals in the world. And this rising realized cap metric that you mentioned, to me, is one of the brightest signals right now. The liquidity in the market is getting deeper and deeper. It's going to invite even more institutions. And that's the signal right now.
Yeah, if anything, it's certainly good publicity for Bitcoin, even if it gets people's hopes up in the short term. But it's very much of any kind of publicity is good publicity. And if you want to say Bitcoin's going to 750 when it's at 115, I got a feeling that's going to orange pill more people than saying it's going down to 75K or something. So I'm here for it, and they're fun, and we'll get more on that in a bit because we're going to get your prediction in just a bit. But it's time for our deep dive with you, Mitchell. So guys, let's roll the stinger and get to it. All right, Mitchell, it's time for our deep dive with you. We got a little bit of insight into your career journey and history before, but I want to dig a little deeper now. Something we touched on earlier is you said you've been in Bitcoin for about 4 or 5 years now. Everybody's got that moment, their orange pill moment. Tell us, what was that like for you? Did you hear about it from a friend or something that told you to get involved? And how long did it take you to really wrap your head around what Bitcoin is after you heard about it? It takes a lot of us some time, so gotta ask.
Yeah, so it took about 6 months. So I actually bought Bitcoin in August of 2020. And the reason I bought it is because I wanted to bet on the 2020 presidential election. And this was before gambling was like mass legalized across the United States. And so I had to buy this fancy, internet money to go do that. And I got smoked. I bet on Trump. He lost. And so my trust in institutions was at an all-time low. If you think back to 2020, obviously we were all locked into our homes. There was a lot of censorship online. I didn't believe the results of the election. So institutional trust, all-time low. Plus, I noticed that they printed a crap ton of money. And I had been studying economics in college, but it was very loose and I hadn't really dove too deep. But when I saw that, I was like, this can't be right. And so from there, I started going down the Bitcoin rabbit hole, learning about the history of money, past instances of hyperinflation. And so that all culminated, after kind of November, December of 2020, it culminated in me being fully orange pilled. I realized Bitcoin has a finite supply. There's no inflation with this asset. It's never be more than 21 million Bitcoin. And at the same time, the institutions, which I had zero trust in, still they can't mess with it. Bitcoin's totally immune, outside of their control. And so from that moment on, I've been full steam ahead trying to orange pill as many people as I can and stack as much Bitcoin as I can.
Oh, yeah. Good advice all around. I love it. And you're only 25, Mitchell. You're a young, strapping man. You're already the head of intelligence at Blockware. Do you see that as a lucky break? Was that perfect timing, or was it just further proof that good things happen when you go all in on Bitcoin? What was that journey like for you?
I believe it was the late great rapper Nipsey Hussle that said, luck is where opportunity meets preparation. And so that's kind of what happened with me. It's, a little bit of luck. It was serendipitous that I was able to get this job at Blockware nearly 4 years ago. But I was also prepared, right? I had done plenty of research on Bitcoin. I had been creating Bitcoin content, even though at the time nobody was listening. I was just shouting to, my 50 followers on X at the time. But it demonstrated a proof of work. And so I was able to get a foot in the door when I was still in college. And then from there, it was, proof of work, continuing to provide value to not just my company, but to everyone in the Bitcoin community, I hope. And then it's been quite a journey over the last couple of years. I've learned a ton, been able to work with a ton of amazing Bitcoiners, very, very smart people, and really dive deep into the mining space specifically, which I feel is, I describe it as a niche within a niche. So Bitcoin is already a very unique topic. There's not many people that really can go deep on Bitcoin, and even fewer of them can go really deep on mining. And so I think there's a lot of fascinating things going on behind the scenes in the world of Bitcoin mining that not many people, even Bitcoin native, may know about.
Yeah, and it certainly sounds like you got a lot of hustle yourself, so I'm sure Nipsey Hussle would be very appreciative of that. And to talk about Bitcoin mining, for people who only know Blockware from the headlines, tell us, how do you describe what the company does in plain English that even my Mima could understand?
We make Bitcoin mining accessible to everyone. So in order to mine Bitcoin, you need a server. You need a physical computer that weighs about 50 pounds and consumes as much electricity as a refrigerator. And these things are loud, they're hot, they're dusty, they consume a lot of energy. And so it's pretty much impractical to run a miner at your own house. You need a dedicated space, a dedicated data center, somewhere rural with access to low-cost electricity. And not everyone has the resources or the time or the know-how to do that. And so we allow investors to get access to the opportunity that is Bitcoin mining, but without doing any of the setup or work themselves. So we have data centers that we own and operate, as well as data centers that we've partnered with some of the best operators in the space. And we have access to low-cost electricity rates, so you can mine Bitcoin profitably. And Bitcoin miners get a lot of tangible benefits. They produce Bitcoin every day at a discount. So it's a discounted DCA strategy. Rather than buying Bitcoin for $115,000 right now, you can run a miner and it's stacking Bitcoin for you every day at 60K per coin, roughly, depending on the machine you're using. So you get that, but you also get enormous tax benefits. So new guidelines from the Big Beautiful Bill allow for 100% depreciation of mining hardware in a single tax year. So if you're a W-2 earner or a business owner, and you're looking to offset ordinary income and lower your tax bill legally, you can purchase Bitcoin miners and do that. So if you have $200,000 of income this year, you can buy $200,000 of miners and lower your tax bill to zero legally. So it's kind of starving the government in two ways, right? You're lowering your tax bill, decreasing the amount of fiat that you give back to the government, and you're supporting the Bitcoin network and accumulating BTC for yourself, which is the alternative monetary network. So it's a double-faceted approach there, and I couldn't think of a better industry to be working in right now.
Yeah, no, it's certainly a still seemingly untapped niche to an extent, but it is growing and quickly. So it's exciting to have a seat on that roller coaster as it's just taken off here. And with halvings, cutting rewards for miners every 4 years, how do you keep Blockware's facilities profitable long term, and especially keeping in mind with the potential deviation from the 4-year halving cycle that I believe you guys just came out with a report about, right?
Absolutely. So, and that's a fantastic question. While the amount of actual BTC that miners acquire goes down over time, what you see is the dollar value of that Bitcoin continues to go up. And so if you believe BTC USD continues to rise, it makes sense to mine, because despite the block subsidy halvings, you're actually arbitraging the electricity cost of production there even greater when Bitcoin's price goes up. Moreover, I think we're in the gold rush of Bitcoin mining. So between now and 2036, I think there's still roughly a million Bitcoin left to be mined. After the 2036 halving, things changed. We have a 100-year battle for the last 1% of Bitcoin, not counting the transaction fee revenue that miners earn. But I still think we're in this gold rush period over the next 10 years where Bitcoin miners are going to do extraordinarily well.
Very cool. And for somebody who's interested in the space, or for an everyday investor, mining is intimidating. I used to do it back in 2016. It took some know-how back then. I'm sure it's a little bit easier now. But how do you go about convincing someone it can be as simple as buying a machine and letting Blockware run it if they're interested but just don't know where to begin?
Yeah, well, a good place to start is simply visiting our website. So we have a plethora of resources. You can see a video of some of our facilities. We actually took some of our clients on a tour there recently. It's a turnkey solution. So you don't have to buy a machine that, gets shipped in from China and takes a couple months and you're not sure where it's going, how it's going to get online, when it's going to get online. We have miners that are available right now. They're already plugged in. We have a marketplace that's proprietary, so you can see the hash rate, the energy consumption, the power draw, the profitability, the revenue, everything you want to know about a Bitcoin miner, all the analytics. You can see that transparently before you even make a purchase. So that really de-risks the opportunity for someone looking to get into the space.
Love that. I mean, everybody loves a little de-risk in this space, but we're also always chasing that upside, which brings us to the next thing that we're going to do here, Mitchell. So every time we have got a special guest on our show, we play a little game with them, kind of Price is Right style. This has been an interesting year for Bitcoin. 2025, Q4 is coming up. We're expecting big things. With that being said, a lot of people are making some pretty fun price predictions. So here's the game. Let's bring up our leaderboard here, Victor, really quick, and go to camera 3. So we play this Price is Right style game. At the end of the year, we ask all of our guests what their price prediction is for Bitcoin. Again, this is all for fun and games. You can see our list right here. The highest bid we've had is Knut Svanholm at 443,000. I apparently am the most conservative one so far. I think mine says at like 143, 142. For fun, because I really want to award you with the Roxom Patagonia that we're giving away to the winner. What is your price prediction to the dollar by the end of 2025? Because I want to put that jacket on you.
Man, I feel like I have somewhat of an advantage here because the year is almost over. I can imagine some of these predictions were made a while ago. But I mean, I don't want to be that guy, but can I say 142,499?
Absolutely, you should be that guy because this is Price is Right style. So 142,499, was that right?
I won't be that guy. Let me lock in 135,000. I think Bitcoin finishes the year strong, but I think 135 is about where I expect.
135. Okay, so let's put Mitchell on the board for 135. Finally, somebody more conservative than me. I don't know if it's a good thing or a bad thing, but we'll take it. All right, Mitchell. So our time here for today is coming to a close. But before we let you go, I'm sure there are plenty of people out there after hearing you talk that want to learn more about you, that want to learn more about Blockware. What's the best place I can send them to get whatever your most, your latest hot takes are and the most recent things you and the team at Blockware are up to?
Yeah, you can find me on X at Mitchell Hodl. So MITCHELL Hodl. I'm very active on there, post pretty much every day except for Sundays. And also go to BlackRock.com. If you want to learn more about Bitcoin mining, there's a contact form there you can fill out. One of our team members will be in touch. And there's also a plethora of resources to educate yourself on Bitcoin mining, the tax benefits, what it actually means, how it works, and everything. So BlackRock.com.
Amazing. Well, Mitchell, I got to say, thank you so much for joining us today. It's always great to get different perspectives of people in different parts of the industry, and we don't get a ton of people from the mining sector in here, so it's always great to learn how things are looking on your end, and we appreciate your expertise and insights and for sharing those with us today on the show. Thanks for coming by.
Thanks for having me, Hank. I enjoyed it.
Yeah, we'll have to do it again sometime soon. Enjoy the rest of your week, and hopefully I'll be giving you a call up with an address to send that Patagonia by year's end.
Yes, sir.
All right, have a good one, Mitchell. All right, we're taking a quick break, but when we're back, we're going to wrap up today's show with a little bullish, bearish, or BS, so stay tuned to all that coming up on the Blockchain Report when we return.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
All right, welcome back. It's time to wrap up today's show with a little bullish, bearish, or BS. This is the part of the program where we recap today's top stories and let you know how they are looking for our beloved orange coin. Let's recap. First up, Michael Saylor and a group of Bitcoin advocates pitched Congress on the Bitcoin Act today, which would direct the U.S. government to acquire 1 million Bitcoin over 5 years. If passed, it would effectively turn the United States into the biggest Bitcoin whale on the planet. Ooh, I'm calling more than just bullish on this. I am calling this bullish, turbocharged bullish. Yeah, the idea of the U.S. government dollar cost averaging into Bitcoin would create a permanent buyer of last resort, raising the long-term floor and sending a signal to global markets everywhere that Bitcoin is here to stay. So government stacking sats equals number go way up, and I'm here for it. I'm bullish. Next up, a new group called the Fellowship PAC announced $100 million in funding to back crypto-friendly candidates in upcoming elections. Their mission is to shape U.S. policies so crypto companies don't flee to other countries with clearer rules. Ooh, I'm calling bullish on this too. Hot start. Money buys policy, and $100 million means Bitcoin has a seat at the political table. The more lawmakers get hooked on campaign cash from crypto, the less likely they are to kill the golden goose, and that means better conditions for adoption and price growth. So I am bullish on that. Let's see if we got the clean sweep today. Last but not least, we got President Trump is trying to fire a Federal Reserve governor the same week the Fed prepares to cut rates for the first time in nearly a year. The battle highlights dysfunction inside the dollar system just as markets gear up for cheaper money. I'm calling bullish on this too. I mean, Fed drama erodes trust in fiat while rate cuts open the door to more risk-taking, baby. And Bitcoin is the ultimate risk-on asset. The more unstable the dollar looks, the more Bitcoin shines as a stable alternative in an unstable system. So, today's final score, we got 3 stories, 3 green lights. Today, my friends, is as bullish as it gets, baby. You got the world's biggest whale in waiting in the U.S. government, a 9-figure war chest of political influence for BTC, and the Fed accidentally running a promo campaign for sound money by making itself look like a circus clown. All of that gives us an extremely bullish diagnosis today, and that also marks an end of today's show of the Blockchain Report. As always, boys and girls, thank you so much for tuning in for all of this crypto chaos and Bitcoin bedlam. If you haven't already, please do me and yourself a little favor here and give that like and subscribe button a little tickle at RoxomTV and yours truly at Hanks at RoxomTV. You can find us on every platform worth doom scrolling on. And until tomorrow, we'll see you again for more Bitcoin bedlam and crypto happenings and all that good stuff right here on the Blockchain Report. Thanks for tuning in, and I'll see you mañana.